Hello traders, Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 27th day of July, 2021, and this is the daily report for gold and silver. The FOMC meeting for this month began today. It will conclude tomorrow, and following that will be a statement along with a press conference from Chairman Powell. Although there is not expected to be any major changes announced in terms of monetary policy, they might touch upon the discussions they've been having about tapering, especially in mortgage-backed securities, seeing as the housing market has heated up to such a great degree. We'll touch upon that in our opening letter. We'll talk about that during our charts, and the show begins now. With the FOMC meeting beginning today and concluding tomorrow, with the release of the monetary policy statement, as well as a press conference by Chairman Powell, we have had muted action in gold today, with it closing in essence unchanged, down 40 cents, although it is below $1,800 at $1,798.80. Spot or Forex gold is trading closely behind that of the futures pricing at $17.9810. That is a net change of $1.11 on the day. Concurrently, we did have a slightly lower U.S. dollar, trading down by about 12.5 points today, a total of 0.14% decline, and is currently fixed at 92.52. We are looking at a daily chart in candlestick format of gold futures. We can see that we've had a very, very narrow and defined trading range. However, we can also definitely say we have seen a bias to the downside, with current pricing residing right at the 50% retracement, which is at 1796.60, along with the 100-day moving average that is currently at 1795 and change. We have also created a compression triangle by fixing our upper level resistance line to a series of highs that came into the market in these three spots, and that's how we derive our current resistance line. In terms of our support line, we're simply fixing it to a couple of lows this low, as well as today's low here, and that creates our lower level support line. There is no doubt we have had gold trade with a series of lower highs as well as higher lows, which means that we have a compressing range overall, and we are quickly approaching the apex, and we're doing that a day before the conclusion of this month's FOMC meeting. It is currently 12:01 in Honolulu, meaning 6:01 in New York, and the morning in Australia. We can see that gold futures have opened up slightly higher on the day, currently at 1799.50, putting it up above the close of New York by a couple of ticks, and it is turning into a green candle. We could see it trade higher throughout the day as traders position themselves prior to the release of tomorrow's statement from the Federal Reserve, along with Jerome Powell's press conference, which will occur a half hour after the conclusion of the FOMC meeting. One indication that the recent price decline that we have witnessed in gold might in fact be coming to an end is looking at the Japanese average chart, or Heikin Ashi. We can see that over the last few days we have had extremely small-bodied candles. We have also seen the return of upper as well as lower wicks, except for today, but realize it just started trading in Australia approximately 5 minutes ago. With the recent upticks of the Delta variant of COVID-19 spreading across the United States, we aren't expecting any news in terms of raising current interest rates or Fed funds rate, which is currently set between 0 0.25%. However, we could expect to hear something about the discussions they are having in regards to tapering their asset purchases, specifically the mortgage-backed securities of their asset purchases, as that market is so extremely overheated. On a technical basis, the key is going to be gold is able to hold above the 50% retracement and concurrently hold above the 100-day moving average. However, it was silver that had a tremendously strong sell-off, losing almost 2.5%, 2.38% decline, a total of 60 cents given up per ounce. Currently, September futures are fixed at $24.71.5. In Australia, it is currently trading up almost 10 cents from the close in New York at $24.74.5. However, it will be extremely difficult to get bullish on silver unless we see an effective close above the 78% Fibonacci retracement, which is currently at $24.91. That is based upon a much shorter data set than we normally use. This data set, for example, is only covering a small area from the lows back in April when silver was trading at $23.78 up to these highs at $28.90. We could expect to see silver fall in line with dollar strength or weakness, depending on the statement that comes out of the Federal Reserve at the conclusion of tomorrow's FOMC meeting. Although the moving averages in silver are in bullish alignment, which means that the 200-day moving average is at the lowest value, followed by the 100-day, followed by the 50-day, we certainly cannot say that there's been any bullish undertones over the last month, month and a half in silver, as we've seen it drift from about $27.80 down to about $24.75. Nonetheless, you can see the tick up that is currently occurring in silver, up about 9 cents from the close of New York. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.